Hi, everybody. Welcome to our Friday live stream. As always, I'm looking forward to today's session and looking forward to getting lots of participation and interaction from those of you who join in. As always, there's a lot of things going on in the market. We are coming up on Martin Luther King Day, which is Monday. Also happens to coincide with Inauguration Day. So just be aware, number one, that the market is going to be closed, not because of Inauguration Day, but because of Luther King Day holiday. That means that functionally speaking, there's going to be, instead of 2 days of no activity, a Saturday and a Sunday, we're going to have 3 days this weekend of no market activity. Why do we care about that? Well, as option sellers, that means that there's an extra day of time decay in the options that we're working with without any market activity. So no price movement, but time decay continues as a constant, which is one of the things that is really important as an option seller, and that works as an advantage in what we're doing. So just be aware of that. That's just kind of an FYI. Another item that I wanted to cover here right at the very beginning. I know I usually give a little overview of my Discord server for those of you who may be new. But I've made some changes to the way the server is organized in the last week. So I want to touch really quickly on that and just kind of explain the logic behind what you see here. So I've broken the primary areas that I publish content in. And if you're a member of the Rebel Income community, then you're getting content from me every single day. That's the purpose. For those of you who may be joining as new members or have joined in the last month or so, you're seeing a difference between what a paying member has access to and what somebody who simply joins my Discord server for free has access to. The Rebel Income free access category gives access to anybody who joins the Discord server, which you can do for free, and you don't have to pay anything, and you get access to early access to my YouTube videos. I publish those on Discord before I make them publicly available. My Monday, Wednesday, and Friday reports where I outline the Rebel Income analysis for stocks that are in my watch list that I have been following for some time, as well as recordings of this live stream, not the live event, but after the fact. All of those get published, as well as my Thursday article. I'm making those available for free for anybody who joins the Discord server. If you have also paid for access to this live stream or in previous iterations, this was a webinar through GoToWebinar, then that's where you see access to it under Rebel Income Plus Access. Barry, that's I'm a little hungry, so what food stock can I recommend? Look. There you go. The idea here is I'm giving away the secret, to be completely honest. I'm giving away the secret of how I've built Rebel Income. If you want to see the way that it's implemented, then that's where I'm trying to motivate people to join as paid members. So that's the plus access part of things. So you get access to the live webinar there, as well as the Tuesday trade alerts that I publish. So if you want to see the actual trades that I'm placing and that we talk about actively in this live stream, then you do need to be a paid member. If you are on this live stream, if you're seeing this, if you are have been in the webinar previously, you are a plus member already. That has already been set up for you and enabled. You also have access to the open discussion thread, which is an area that I've purposely designed just for the plus access members, so that we can share comments and perspectives with each other. If you want to reach out directly to me and have me respond. I pay attention to that thread throughout the course of the day. Of course, anybody can also message me directly on Discord, which is pretty great, just through the direct messages area. And again, I respond to those. Probably, it's fair to say I'm able to respond to Discord messages more quickly even than email. So, however you prefer to get in touch with me, if you have any questions or needs between these Friday events, then feel free to let me know. Another area that Plus Access members have access to is ebooks. Right now, there's just one, and that's the my Trade for All Seasons ebook that I've made available for some time for anybody who is paying to access this live stream. I also am working on some other things as well, and I will publish them. I will also publish them here for free for those of you who are already pay Plus Access members. So that kind of outlines the difference that you see in the way that I've tried to organize the Discord server. If there's any questions or concerns about it, please feel free to reach out to me. All right. Enough of that. Let's go ahead and dive in. It's been an interesting week in the market again, as always. It's always an interesting week in the market, right? That means there's a lot of things going on. The last few days have seen the market try to recover from what had previously been a bit of a correction in the market. We saw this is the very first week of December where we saw a peak, and then the market been dropping off from that point. And for the last few days, we've seen a rally, and we're seeing a pretty strong day in the market for the most part today. We'll see if that continues. But what we've been seeing then is a drawdown into a little bit of a consolidation period. And what looks like today is a little bit of a breakout above that. So if that breakout holds, then I would expect that we should see the market continue to push back towards the previous December high. This particular chart that I'm looking at right now, this is just on the Dow Jones. Let's take a look at the S&P 500. There we go. And we see some of the same kind of thing. It's a little bit closer to its December high, but the same kind of activity. And the NASDAQ is doing the same thing as well. Very much like the S&P 500. So it does look like the market could be recovering some momentum, which could be really interesting. We'll see if it pushes to a brand new set of highs. If it does, then a lot of the angst that people were feeling is, and we talked about this a little bit last week, as the market was dropping and seemed to be picking up more bearish momentum than bullish. This will prove to be nothing more than just another pullback within a broader overall upward trend. I think the market would love to do that. I love to see that. I think the market has proven really all the way since August when the Fed really started to lower rates. I think that we've seen the market trying to bet on being more optimistic, more bullish, even as questions have persisted. So we'll see how things go, but that's just kind of an overview of what's happening in the broader market overall. Now we are on. It is January 17th. It's Expiration Friday. There's always there's always options that are set for expiry with the way that the market has broken itself out into monthly and weekly expirations in the options market now, and that's a lot of fun. That means that there's 2 stocks that are on deck this week for expiration. I have put sales on Hormel Foods as well as on Nike NKE. So we'll check in with those really quickly and go over those. Hopefully we'll have some time for you to offer up some some perspectives on things that you have been following and might be interested in getting another look at as well. Depending on where we are for time, I may even we may even have time to actually run through the entire exercise that I go through when I'm analyzing these stocks for the trades that I highlight with Rebel Income, or that you see me write the detailed analysis on in the Rebel Income reports. If you want, we may have some time to run one of those, run a stock you're interested in through that process. But one of the things that I wanted to talk about really quickly, before we really got any deeper, was if you notice, I highlighted a trade on Tuesday, but I didn't place it. I wrote about this a little bit in Thursday's article, but what happened? Did I miss the boat on the trade? Well, not necessarily. There's always something to be said for open interest and volume when it comes to the options market. And it's one thing to find a stock that is setting up a nice pattern that we're interested in. And I'm just going to change over here. Let's pull up CPB, because this is the stock that I highlighted for this week's trade. We can see really it's been hovering. It's a little bit above 39 now, but it was hovering between about 38 and a little below 39 for most of the week. That's where it was when I highlighted the trade. Wednesday, when I went to place the trade, it was still around in the same area, which ideally should have meant that the trade should still be available at about the same price that I found it at on Tuesday. Remember, I always wait a day before I place the trade that I'm highlighting, not only to avoid primarily to avoid the perception of front running these trades. I don't want it to look like I'm placing the trade and then telling you about it. So I tell you about it and then I place it. But also because I want to try to make sure to give the markets an opportunity to see some movement and come in a little bit. It feels a little bit more genuine, and it's also, to be honest, a little bit easier for me in terms of the context of everything else I have to do with Rebel Income and the rest of my life to manage my trades by highlighting them on Tuesday, placing them on Wednesday. The trade that I had in mind was for February week 1 expiration. The $38 strike price is what I was looking at. So we were talking about 38 here. Now you can see that it's the stock is, with it above 39 now. It looks like 38 isn't isn't the same kind of trade practically as it was. But I want to go ahead and take a look at the contract details here, because this has actually not changed in the 4 days since I highlighted the trade. Open interest on Tuesday, when I found it, was exactly 0. Open interest was exactly 8. Wednesday, when I came in and I looked to see if I looked to place the trade, enter it into my broker system, open interest was 8. Day's volume was 0. I put in my sell to open limit order, and it didn't fill because there just wasn't enough open interest in it. I came back again Thursday to take a look at it, and the volume was 0. Open interest was 8. And so again, there wasn't an opportunity to place this trade. Now the stock has moved far enough that if I still wanted to place a trade in Campbell Soup, the Campbell's company, it's not just Campbell Soup anymore, in the Campbell's company, this strike price really isn't very practical at all. In fact, looks like 39 would work out better with about the same bid price as what I highlighted on Tuesday. Hi, Jay. How you doing? So glad you're here. So this is interesting, but again, kind of the same phenomenon going on with this one. Again, nothing in volume, very low open interest. You can see the last time a trade was placed on this was on the 14th. That's late. That's late Tuesday is the last time a trade was placed on this particular contract. So again, just not really looking very conducive to trying to get an order in on the Campbell's company here. Sometimes that happens, by pointing out the low volume, low open interest, I'm not saying that you avoid trades with these characteristics. However, I am saying that there's a really good chance that a put sale that you enter in as a new trade might not get filled. And so if you really like the stock that you see that I've highlighted, and maybe you see very low numbers in terms of open interest and volume, the better choice, if you really want to be in the stock, maybe to go ahead and buy the stock, and then maybe look for the covered call trade. Barry, thank you. I do the same much of the time. I set a limit order on puts or calls when it seems the price is moving, usually on calls when going out of the money on the high side. Yeah. Totally makes sense. So again, just be aware of that. This is one of these. This is a dynamic that impacts how quickly you're able to place trades, and sometimes whether or not you're able to place a trade. Right? It doesn't mean that I shy away from stocks with these characteristics. You see that I don't. Stocks that may not offer weekly options, but instead only monthly options, often have these characteristics. I don't shy away from those either. If the opportunity looks right, I'm still going to try to place that trade. But you do have to factor in, you do have to think about these elements, these logistical details, even if they aren't the primary drivers of what is going to dictate a trade. They are logistics that are going to impact the way that you place the trade and what kind of adjustments you may decide to make. In my case, I tried to place the trade and just accepted the fact it might go or it might not. Even though I really like Campbell's and I liked the trade that I had set up, I also don't necessarily feel a ton of urgency to have that trade. Because to be completely honest, there's a lot of trades going on right now. I've picked up some more stocks from put sale assignments. I was assigned additional shares of Huntsman. I've got shares in Borg Warner, Comcast, FMC. There's a lot of these stocks that I've been assigned lately that are still significantly below the prices that they were at when I was assigned. And so, that doesn't necessarily mean that I'm not going to place a trade, but at the same time, being a little bit more fully invested than I have been does mean that if one of these trades, like Campbell's, doesn't come through, I'm okay. It's all right, and I'm willing to manage that. If I get it, wonderful. If I don't, okay, I can wait another week. This goes back to the same principle that you've seen me talk about before, where there's a difference between finding a good trade and feeling like you have to place a trade. I'm willing to be selective and understanding that there's always a new opportunity that the market is going to show there's going to give you in the next week, in the next month, whatever the time period is. Barry, again, thank you. Yesterday on LRCX, I placed a limit call order for $1.30 for 2 weeks at an 83 strike, and it didn't take long for it to fill. Then the price dropped again. So you got, let's take a look at LRCX. There we are. Yeah. Look at that. We'll just go ahead and highlight this. Boy, here is exactly what you're talking about. This is called a hanging man candlestick. And this is one of the more dramatic hanging mans I've seen in a long time. A typical hanging man looks like this, where you have a long long wick. The wick represents the high and the low price for the day. And then there's usually, it's also called an inverted hammer, but this represents the wick is the high and the low. The rectangle or square shape, however it comes out, represents the open and closing prices. If it's open, like this one is, then that means that the closing price was higher than the opening price. If it's filled, such as I'm doing now, then that means that the closing price is below the is below the below the opening price. So this is typically a pretty normal looking kind of a hanging man inverted hammer formation. And what this one is that you were able to place that trade on, boy, that's an impressive and really quick drop. Shot all the way up to 83 and came all the way back down to 79 in very short order. So that's impressive. Stock is now right around 80. That's around the price that I was originally assigned at on this stock. So that's interesting. That's a big movement in a very, very, very short window of time. So thank you for sharing that. Appreciate it. And I've got my covered call at 81 for next week on LRCX. We're a little below that price. We'll see where it gets to. But if it had been able to hold that rally up to 83, that would have been interesting. But we'll see where things land. Okay. So I've talked about the trade that I was planning to place on Tuesday. Anybody that was able to get into Campbell's, maybe you found a different variation or a different approach. Barry's angling for another tick mark, folks. Me as well, but I've made about $700 in premiums for a single lot on LRCX. So Barry, there you go. Jay has a put on Campbell's. So I didn't mine passed me by. So Jay, good on you for being able to get that in. And this one is again, Campbell's is a stock I like. It is deeply discounted right now. And that's why I highlighted that trade, because this is, just go back here to Campbell's again. Give the chart a second to load. I apologize for the wait. There we go. Look at this. Look at this. Look at this downward trend. 52 all the way down to about a little below 38 in just a few months. That's pretty sharp, and that's a lot more volatility than I usually associate with food product stocks. But it also took CPB from being pretty clearly overvalued into deeply discounted territory, which means that it hit a level that I liked quite a bit more. So, Jay, you're able to get into it, and that's awesome. We'll see where that goes. And in the meantime, there are some other ones that are coming up. So let's take a look at these here. Let's talk about Hormel. This is a trade I placed a month ago. Sold a put with target 39. Okay. So you went a little bit in the money to get to get the trade, presumably, since the stock has mostly been a little bit below that for the last few days. Maybe you didn't. Oh, wrong stock. Okay. You did a buy right. Okay. So you bought the stock, then you did the covered call. Is that right, Jay? Okay, you bought the stock at 39.01 and then you sold a covered call. Perfect. Okay. Awesome. Awesome. That's great. And that's exactly what I was just talking about earlier. If you're seeing, thank you, 55-cent premium on that, so you actually did pretty nicely. That's not bad at all. Um, that's a really good example, real example of what I was talking about earlier. If you see me highlight a stock where the options have perhaps the characteristics of lower open interest, lower volume numbers on the put sales, it may make more sense to buy the stock outright. Excuse me, I apologize. Um, had to clear my throat. It may make more sense to buy the stock outright and then work on the covered call side as well. That's actually a more conservative trade. Even your broker would say that because you're owning the stock. Whereas with the put, we are technically in a naked position, right? Even if it's working on a cash secured basis. The broker is going to perceive that as a different kind of risk profile, even though I believe that cash secured puts are very, very conservative. So the buying the stock outright, doing the buy right that Jay is talking about, that's a nice variation as well. I'm certainly in favor of it, excuse me. And that's why I include a covered call on every single one of these as well when I highlight them. Okay, going back to Hormel, this is a trade that I placed a month ago. You can see the stock is a little bit below 30 now. Yeah, thanks, Barry. Yeah, especially if it's just before next dividend date. Very often we will see the stock drop back a little bit below, be prior to a dividend distribution. The ex-dividend date, if it's coming up on that very closely, a lot of times that's a great opportunity to go ahead and buy the stock. Hormel is a good example. I highlighted this trade a month ago, but the expiration clearly missed the dividend X date, which was this Monday. So if you liked Hormel but you wanted this dividend, 29 cents on a $30 stock roughly, that is not bad at all, right? That's a little under 4% of the stock's current price. So if you wanted that dividend, why not buy the stock outright, take that dividend distribution and look for a covered call as well. That's smart as well. So that's really nice. In the case of Campbell's, go back to that really quickly. It had a dividend distribution at the beginning of the month, so not exactly the same story. But yes, Barry, I totally agree with what you're saying. Okay, so we're at $29.93 right now on this one. The put sale that I placed was at $32. I brought in 70 cents for a little over 2% for 1 month. Now that's a good trade, but all things being equal right now, unless this stock picks up a couple of dollars of momentum, I'm going to take another assignment. I really doubt that it's going to find that momentum in the next in the next couple of hours, considering the fact that it's got to get all the way up here. It's got to break above 20-day moving average resistance. It's got a lot of pivot resistance from prior pivot highs all the way between it, 30, 31, 32, that it's got to break above as well. So looks like I'm going to be taking an assignment here, and that's okay. I don't mind this. Again, just like Campbell's, Hormel is a company I really like. They have really good fundamentals. And if the stock stabilizes at all, starts to rally back up towards 32, then there'll be another opportunity for a good covered call trade. Now, I have missed this dividend distribution. I have to, that's a fact, but that's okay. That's one of the reasons I like covered calls is it's like paying myself a dividend. So look for that, and so we'll see where that one lands. Is there anybody else that's in on Hormel? Excuse me just a sec. All right. The other trade that is set for expiry today is a put sale from the beginning of the first week of January that I placed on Nike. So $74 strike price on this, got a little under 1.5% for 2 weeks. Remember, 1.5% is not necessarily my target per trade, but really my target per month. And so when you think about being able to place multiple trades over a 1 month period of time with shorter expirations, 1.43 is okay. That works out just fine. So this was a pretty useful trade in the moment. Let's take a look at what Nike is doing now. Okay. Down here a little above 71, and what we're seeing now, it has been dropping a little bit, and I sold the put option while it was dropping. It was right in this neighborhood. So it was in the middle of this drop and looking for some stabilization, perhaps around this support level, which looks like it's dropped below, but it's also, this decline looks like it's starting to flatten out a little bit. And so we may be seeing, sorry, let me try to unclutter my drawing here. Looks like we may be seeing a little bit of consolidation here around 71. Maybe. In the meantime, working against what I've just talked about, we have, pretty clearly declining 20-day moving average, providing some additional resistance. All right, Jay, nice. It says has a put sale on Hormel at 29. That's so far is expiring worthless today. So there you go. Mine was in at 32. You're in at 29, so you've got a better strike price, right? Even if you were to take the assignment, you got a better. You end up with a better value proposition that I've got, and I like my value proposition at 32. But hey, if 32 is good, 29 is better. So nice. I like that. I like it when you do a little bit better than me. It's fun to kind of make it a little bit competitive, but also it's nice when I see people being able to implement these trades effectively and maybe even a little bit better than I did. That's nice. That's fun. I enjoy it. So again, just like with Hormel, looks like I'm going to be taking another assignment since I sold the $74 strike. I'm okay with that. This does have additionally what should be really solid support. I think this is one of the things that's fueling the stabilization we're seeing over the last week or so. Notice I went really slow with that line to try to keep it from going totally off, but keep it some resemblance of straight there. But if this support holds, then we may see the stock start to define a clearer consolidation range, somewhere between maybe 71 and possibly 72, 73, maybe 75, based on this activity here. That would be okay. That would be something that I could work with for quite a bit with Nike. Not only from the current put sell, but certainly from being able to look for some good covered call trades. Nike has already given me some of those already. It did a couple of times in 2024. So these deeply discounted levels that it's sitting at right now make it really actually very attractive. And I know there are people that don't like Nike as a company. That's fine. I kind of try to divorce myself a little bit from trying to be too biased one way or another about these and try to take it strictly on the basis of what their value proposition, what their fundamental strengths are, and recognize that a company like Nike, you're talking about the 600-pound gorilla in their industry. And I like working with the big boys. Barry, I've been tempted to sell RPRX outright. Just priced itself in the money for me barely, but holding out to hopefully sell a call. Okay. RPRX. Royalty Pharma. Okay. Thank you. Wow. So you're going to need to share some more details here, Barry. First of all, what price are you in at? You say it's priced itself in the money for you barely. So if I'm reading that right, you bought it a little bit earlier at around the current price, but watched it decline down into the 20s, and now it's up here again. Just for the rest of us, and for the sake of full disclosure, this is not a recommendation to buy or sell. I have not done any previous analysis on this company. I appreciate Barry offering it up as an example. That's really nice. But I can't speak to its fundamental strength or its value proposition. Just talking about its price movement today, though, and in the last couple of weeks. I mean, look at this rally from, what is this, about 24, 25, all the way to about 31 right now. That's a really impressive movement. Okay, got in at 30 in March. So right in this range is where you bought it. And then you had the fun of watching it do this, right? Which is great. And now it's finally rebounding back to where you bought it, and you are a little bit in the money. So what is the right answer? You say that you're thinking about selling it outright, but you're also trying to look for an opportunity to sell a covered call. Well, again, I can't tell you what you should or shouldn't do here. I will say, anytime you can close out a position at a profit, that's a good thing, right? And so with that, if you feel like you've been in it for long enough, you've gotten some dividend distributions on it. There's 21, 21, 21. So you've gotten 42.63 cents. It's about that's actually not too bad. That's a little over 2% in dividends just in the last, just since you bought the stock at 30. That's not terrible, just in terms of passive income, even if it's not super high. But that's also only 3 distributions. Okay, monthly options on this one. You're right. And really, it looks like the 32.50 would be kind of hard, wouldn't it? Yeah. No open interest here at 32.50. Take a look at the 30 for right now. And again, this is expiring today. So let's go out a month. Take a look at the 30. That 20-cent difference, 20-cent difference between bid and ask. 2 contracts in volume, 7 in open interest. You can get about 1.5% for the next 35 days on the covered call at 30, which is the same price that you bought the stock at. The 32.50, you could bake in The idea here is you can bake in a little bit of capital gain, but also there's no bid price to be spoken of, and no trades entered at this on this contract. Yeah, and I hesitant to write 30 in case it is not finished climbing. At the same time, this parabolic increase really begs the question: how long is it going to continue before it has to start pulling back? Before people start to take profits? I to me, it's hard to see a covered call, a really good covered call opportunity here. For the same reason you're saying you're hesitant to write the $30 strike, I would be as well. Um, and with the stock up here a little bit above 30, yeah, it is tempting to go ahead and take that profit, isn't it? That really depends on you when all is said and done. The dividend yield is useful. It's not compelling. 2.71% annualized is what that works out to. If it's kind of a flip of the coin as to what you should do, the question to me is how how committed are you to this company? How much to what extent would you consider this as being kind of a core member of your portfolio? Um, and if this would be something kind of like a Dow would be for me, or Borg Warner. Yeah, legacy stock. Thank you. You took the word. You gave me exactly the word I was searching for. If it's a legacy stock, then maybe there's a reason to hold on to it, keep taking those dividend distributions. Says it was meant to be a trade, but not a hold. If that's the case, maybe you're better off just taking the profit and freeing up that capital and going to look for the next trade, right? Yeah, it took a month to get to this point, but you can book about $1 of profit. You've got the 63 cents of dividends that you brought in the meantime, and so if you think about it in those terms, $1.63 divided by 30, done about 5.43% for 10 months of time. You did better. You did better with Royalty Pharma than you would have if you went and you bought a treasury bond. So that's not terrible, even if you were to just go ahead and take the profit and call it good. The mistake that a lot of people make when it comes to trying to trade stocks, buy and hold and those kinds of things, is to assume that because I'm holding for several months or a year or more, that I should be able to make several dollars in profit. I don't agree with that. I just don't agree with that. The question to me is the cumulative result of all of the income that you brought in, say from dividends or from put sales, covered calls, etc. If all of those together are already good enough to give you a satisfactory result, and maybe you're baking in a little bit of a gain on top of that, maybe that's enough. And if it is, why not go ahead and book that profit? Why not go ahead and cash that? Add that to your account, free up some capital, so you got a little bit more flexibility, and then you can decide what you want to do with the next position. Again, I'm just trying to offer different alternatives here for you to think about, and not tell you what you should or shouldn't do. But I hope that helps. I really appreciate you offering up this example. This is a this is a really good situation to think about whether or not you're holding this stock or not, because at some point all of us end up with this kind of a situation, right? And so the question is, what do you do? And how do you think about it? What are the what are the different elements you should factor into your decision-making process. All right. I mentioned at the beginning of the session that we may have some time to run through run through a detailed analysis of one of these stocks. Okay, Barry, you're going to set a good to cancel to sell at 31. There you go. And if you get filled at 31, that's awesome, right? You get that $1 profit on top. So good on you. That's not bad. Would it be useful to use Royalty Pharma for our analysis example? What do you think, folks? You're the ones that are on here live, so you get to decide. If there's a different one that you would rather see, then feel free to let me know. Barry, you're right. Last week you told me that you wrote calls for Walgreens at 12.50. That is very true. Which are looking really nice today. And there's an earnings report that came out last Friday. So let's see. Sometimes it takes time for my data sources to parse the information the way that I want. Let's see what we've got for Walgreens. This is a stock, just for those of you who may not be aware, I've been holding for a very long time at a much higher price. And so Barry's in a really good position with this one, and I'm hoping that it starts to rally at some point. Your cover call expires next week. Well, the way momentum is going for you right now, it looks like you're in a pretty good spot. It could come back. You've got support. You got support for the stock at the 200-day moving average, which is around $12 right now. So could come down a little bit below that point, but that's also not horrible, right? Let's run through the analysis and let's see where this lines up in terms of being overvalued, undervalued, etc. Looks like we should have most of what we need for this to be useful. Okay. 1389. 1292. Okay. Barry, I would rather it not keep going up. Yeah. If you're like me, you were assigned at a much higher price, then I can definitely relate. Hold on a moment. There we go. $13.09. And the question here is really whether or not there's a strong argument to be made on the basis of the company's business. And what is the overall value of that business? Is there a case to be made for the idea that the stock should continue to increase in price? Okay. So what we're going to do is just go through each column here. And I've already got my price to book ratio. Current ratio is 1.01. So I'm just going to go down the list here and plug in these numbers to do a historical view of what that looks like. So we've got 0.65, 0.87, 1.13, 0.7, 1.26. Macro Trends is a useful source here just because it does give a quarter by quarter historical analysis to refer off of. And I like that because if I can get, this gives me five years of quarterly data to go back and reference. And that usually provides a pretty good benchmark for a historical comparison. Okay, that's the price to book. Now let's add the price to free cash flow analysis to that as well. And so this one, I'm gonna have to do some manual calculations here because the last free cash flow calculation, excuse me, finding a little bit of a cold. The last free cash flow calculation that we have from Macro Trends was in August, and we can see with a new set of financial data, we've got a different set. We've got some different numbers to work off of. In fact, here's the latest 471 is the free cash flow number, 471 million. So let's plug that in for a second. And I want to try to calculate what the free cash flow ratio is. So the next thing I need are the total shares outstanding. And if I can't get that from here, which I may be able to do, nope. I can get it from Schwab. So shares outstanding, 864.15. So 471 divided by 864.15, 54.5 cents per share in free cash flow. Barry, you also have a 23 call on CPRI expiring today in at 22.50, but cost basis is around $20 with premiums. And so really quickly, just check in on that price for you. Sorry, CFRI. CPRI. Sorry, I read that wrong. There we go. 24.19 and at 22.50. This is a nice one. Looks like this one would be okay to get called out on, right? That wouldn't be a horrible result. Okay. So 54.50. And so if I divide that, it's taken off as well, right? It's picking up a lot of momentum. So I'm going to divide the stock's current price, 1309, by 54.50, and I get a free cash flow ratio of 24.01. Bye-bye RPRX. We don't know. We'll see. Okay. Oh, you mean that your order got filled? Well, that's good, right? That is hardly a bad thing. Okay, 2401. And now we'll just go, we'll skip. I'm going to skip this line and just work my way down. 7.13, 6.4, 6.64, 27. These numbers have been historically much lower because the company had much healthier free cash flow than, frankly, they do right now. Okay. So that puts, this means that in literal terms, Walgreens is a little bit overvalued by about 12%. Now that's okay. They are also in the process of kind of trying to reverse a pattern of pretty strong underperformance, not only in the stock, but also with some difficult results stemming from some of the investments they're making in building out some of their Village MD clinics. Let's run through the rest of the details. And so for this, I like to go to fundamental charts, free cash flow, and our market cap. And 471, 535, 97 minus 214. This is what I'm referring to in terms of reversing a previous pattern of underperformance. Their heavy investments in these clinics prompted them to record a negative free cash flow annualized number at the beginning of 2024. And so they've been reversing since then. And we'll see if that pattern continues to improve. If it begins to approach any of its historical levels, then that'll mean that at Walgreens' current price, it'll be a major discount. Right now, it's still trying to work through that process. Here's cash. And this is a little bit of good news where we can see a pattern of increasing liquidity over the past year, even if it declined pretty sharply from this quarter to this quarter, right? 3,109 all the way down. It went down by about 2.2, no, about 1.2 billion. So, no, almost 2 billion, excuse me. Okay. Apologize for all of the ads here that keep popping up. I'm cheap and I don't pay for this data. Nice thing about Zacks is they do make this available for free, but you're going to be dealing with ads as a result. Okay. So here, about $7.6 billion in debt compared to about $1.2 billion in cash. Increasing free cash flow over the past year means that they're probably okay so far in terms of being able to service their debt, but it is still a little bit disproportionate debt to the resources they have in terms of available cash as well as in cash flow. Let's take a look at net income and see what that pattern looks like. This is one that I really like to pay attention to just to try to understand what overall profitability looks like. And obviously negative numbers for net income don't look great. That means that the company is spending more than they're bringing in. 39,459. However, I try to compare the trailing 12 months to the most recent quarter because this comparison can really tell you a lot. Okay, so let's think about this for a second. Here we have negative free cash flow, right? And over the past year, we've seen a pattern of gradual increase from that point, even with a decline here in the last quarter. Now we have almost negative 6% net income to revenue in the last year for Walgreens, which is a concern. They are still negative by a little over 0.5% as of the last quarter. So they're still spending more than they're bringing in, which means that explains part of this decline. It also explains a little bit of this. At the same time, however, what we are seeing is a very clear improvement from the last quarter compared to the previous year. And if that pattern holds, that should mean that hopefully in the quarters to come, Walgreens will hopefully be able to turn net income back to the positive. And if we see positive net income, then the residual effect should be that free cash flow and liquidity from cash, should also begin to improve. So those should be positives if that pattern can continue. If it reverses and it becomes weaker again in the next quarter, well, then they probably still got some trouble ahead. Walgreens has maintained their dividend pretty consistently, at least over the last year. I take it back. They cut it from $1.90 at the beginning of 2024. Then they made it $1 in the last year. So paying out 25 cents per quarter, which at the current price sounds really impressive, considering some of the other concerns here we've got. To be completely frank, would not surprise me if they were to decide to cut their dividend a little bit further to try to save some more money. A lot of that depends on whether or not they can reverse that pattern of negative net income. If they can continue to see free cash flow improve, then that may not be necessary. But if they continue to struggle, that could be a next step. So we'll see where that goes. So hopefully that helps you out, Barry. See how that impacts the trade that you're in, right? So we'll see what happens with it. As always, we're a little bit over, but I really appreciate everybody being here and for your participation and your comments. I hope you have a wonderful weekend. Enjoy the extended weekend. Remember, Monday is going to be a holiday with the Martin Luther King Day holiday observance in the markets and in the bank as a banking holiday. And if you have questions between now and next Friday, please don't hesitate to reach out and let me know. Thanks, everybody.